folks, I'm Ellie Little, and this is your daily TA wrap, where we take a look at these markets and we take it from a neoclassical perspective and ask ourselves what happened today and what might it tell us about tomorrow. I do this show 4 times a week. I do it Monday through Thursday, live at 9 o'clock Eastern time here from the base of what was a very hot Rocky Mountains today. Sweating in the mountains, that's not usually what you think of. We had some sweat in the market too, right? This thing's been going down, going down, going down. We were talking about a potential bounce Monday or Tuesday. Monday tried, couldn't do it. Tuesday did it. Other than the Dow couldn't stay up there. If we look at the Dow actually closed red today. Well, we don't actually want the indexes. There we go. 7.7 down, 15,000, sitting on the cusp of a magic number. S&Ps, they were up 6 1/4, 1652.35. The composite tacked on 24.5, 38.13.5. NDX gathered 12.5 more, 30.82.17. The Russell was the winner, 15.32 higher, 10.28.5. Russell climbed right back up. Never did the retest regenerate. We've got it on all the indexes except for this one. I suspect we're going to see on that one before it's done. Looks like my oil went off the board here. We'll have to replace that. But we had in the commodity markets, they were generally flat to down a little bit. And the dollar got whacked today, down almost 0.5%. It was low as 21.82, closed 21.87. So markets stretching on out here, trying to push higher, but you know there's a lot of issues here in terms of the way this is pushing. So let's pull up the charts here and take a look at it and see what we got. All right, so S&Ps. Let's start with them. If we look at the S&Ps, the thing you always have to do, and it's not always easy, but usually it's reasonably clear. And that is you have to find benchmarks. You got to find things to compare to, right? Most of the time you see me doing it kind of nonchalantly here, but if you're going to apply neoclassical, you're going to have to find inflection points where things should happen, right? And then you see how they unfold to give you some sort of indication about what it's telling you, right? I mean, that's the whole tape reading is all about that. I mean, that is what it is. That is how it works. One of the most important pieces, of course, is finding the benchmark. Well, Thursday was the day down, right? It was a gap down. You left a gap up there. You had a low volume expansion. You got a high and low on that bar, and it becomes an anchor. What is it anchoring? Well, it's kind of hard to tell here, but it's anchoring a resistance zone, this lower one, and then there's a higher one up above it. Bottom of that one is the bar you see here. Top of it is the bar you see on this, May 31st. So the division here is there's a resistance zone here, there's another one underneath it, and it really is based on the bottom of this bar. So that bar becomes important. Bottom of the bar, 1658.59. You went into it today, 1658.92. So you got into it. You did 29.9. What did they have over here? 34.2. Not enough, right? Couldn't stay in it. Little tail on the top, reverses, closes down. That's a test failure on the way back up on the S&Ps. This thing's going to have to try again, or it's actually going to set up an ABCD. Now, the way these ABCDs are setting up, if this in fact is what's happening, is they're going to set up pretty deep. And what I mean by that is you had one off the top, right from here to there, and you finished it off on this bar easily. So then you have to measure from the next place down, which would be the top of this bar. So 1718, you go as low as 1645. So roughly 55 points, right? So far your bounce is taking you to 1658. 55 off of that gives you 1603. Where's 1603? It's way back down here. It's into the top of this bar, right? Where the big volume lies, right down in here. So that's the way it's setting up so far. But we actually have a mixed picture. It's not as clean everywhere else. If we look on the Dow Jones really isn't telling us anything other than the fact that it can't rally and hold. It went up, left a big tail, came back down. This one wants to work lower. And this one can't even set up an ABCD. It just keeps working lower. If we go to the stronger ones, IXIC. If we look at the IXIC, this one went up, but it couldn't quite get to this swing point, not the swing point, but this high volume off the top bar, right? That was your gap down. That's Thursday last week. Top of that guy's 36.2677. Again, that's what you're comparing to. You went up today to 36.2526, so you didn't quite get to it. Didn't have the volume. You don't have to actually get over it and test it. You can actually fail trying to test it, right? And so we went into resistance, right? We stayed into resistance, so that's good. That's a good thing. But we couldn't get to the top. We don't have the volume. That one can test tomorrow, but that looks like a failure coming. NDX. NDX, of course, has been struggling. Each time it tries to push higher, we're getting these long tails on the top side, and that's not good. It's testing 3 times now, 3 days in a row, the top of the gap down bar, and this is with the benefit, 2 of those 3 days, of Apple taking this thing higher. Today, Apple actually started to give some back. Google was up yesterday pretty good, up again today, but then Google gave it back at the end. I think Microsoft stayed up, but it wasn't enough to keep this up. Yeah, it tacked on some profits today. I mean, some higher prices, but that's a failure. Again, that's 3 in a row. I don't know how much longer you can hold here. It looks to me like you're going to come test the bottom. Now, the savior in the bunch, of course, is the Russell. Has been the strongest index. Continues to be the strongest index. Hasn't even done a retest, regenerate on this lower high. They all did it on the prior high. They all failed up there, and they all failed fairly quickly, which is what started, when we finally got that rollover on Wednesday last week. The fact that we couldn't hold swing point highs after making new highs was an indication that we may in fact roll. And when we got those sectors telling us that on Wednesday last week, it was pretty clear we were going to have a tough day Thursday, and sure enough, it was really tough. So we break down, but the Russell pushes back up. There's the bar it's coming back into, got into the low, stayed in the low, doesn't have the volume, but it's in it. Okay, the first step you got to take is get back into whatever it is that you're trying to test. It's into it, it stayed into it. So you have a mixed picture, but it's fairly bleak because most of these indexes are still pointing to the downside, not the upside. So if there's hope, it's in the Russell. The Russell is the one that's going to have to, enthuse people to continue to buy. Let's switch over right quick and look at the sectors. Now on the indexes, pretty clean slate, things are trying to move lower. But on the sectors, it's a little bit more mixed. The IYT in particular, now these sectors break down in one of 2 ways in terms of what to compare to. Thursday's bar is either the lows or Thursday's bar gap is the resistance in most of these. In this case, it was the low. It left volume down there. When you leave volume like that and you're testing something like you did, there's a decent chance that you can come back. Now, you still have on the IYT, you still have the big bar up over here. So the IYT is probably going to work a little bit higher. We'll see a test back up into 115.33 would be the area that I think it can test back up into. The SOX. Now the SOX today was up. Almost everything was up today. The SOX, in terms of across the sectors, most stocks, even though they didn't close as great. This had a bounce, not much to it, but it's hard to read this chart because we just don't get enough volume in it. But it's such an important sector, I always look at it. That one looks like it can bounce a little bit higher as well. The XLB. XLB, remember, had failed at the top on the weekly, did the Thursday bar down. That bar's low is 40.73. That's the measurement stick as you come back into it. You got into it, you closed into it. Don't have the volume, but you're into it. So just like we saw with the Russell, XLB can try to move higher. The XLE has a bad tick, I saw as I started looking at these right before I came on air. So I don't know exactly what the high was on this guy. We'll have to get that cleaned up tomorrow. So if we look at this one, just assuming it was a little bit higher up, it looks to me like it was trying to get back into 81.20. If anybody can get me a good tick on this, that would be nice. If it did get into 81.20, it's a failure, a test failure. XLF. XLF actually failed again. So the bar it was coming back into, well, I shouldn't say failed again. It closed right at where it had to. So you've got two bars you're looking at. 20 over here on the high. The Thursday bust down with 19.99 on the low. We got into 19.99 on the close, closed right at the highs almost. That one is about as close as a failure as you can get. Not enough volume into resistance, into the bar. Tomorrow's a critical day for it. Can it actually get up there or not? Looks to me like it's going to fail. XLI. Yeah, you got a bad tick too. Thanks, X. XLI. Okay, so the XLI. So this one has the gap down. It's trying to get to the top of the bar. That's the measurement stick here. Hasn't gotten to it yet. Doesn't have the volume on the bounce. Doesn't look promising. XLK. Okay, XLK, the Thursday bar. We're still playing with the bottom of it. Can't get anything going. This looks like the NDX. This one's going to try to trade lower. And then we had interest rates actually backing off today with bonds doing some sort of a rally. Remember we were talking about last night, the bonds really were the key to getting a move back up. Bonds actually did move up today. That was what allowed this market to move up. We'll look at the bonds here in a bit because the bonds really are holding the keys right now. XLP got a little bounce. I mean, that's really you can barely see it. I don't know what to think of that. Yeah, it can bounce a little bit, but it's pretty weak. The one that really got some juice early was the utilities because they got sold off so bad, and they're getting a bounce. These, to me, these all look like ABCD starting to set up on the way down. XLV. This is probably the most positive one, but you can see no volume coming into it on the bounce. Also looks like it's going to try to set up an ABCD once it gets to the top of the Thursday bar. Across the indexes, across the sectors, the Thursday bar top is really where you want to be looking. If these sectors, these indexes cannot get up and into the gap, the writing's pretty clear as to what comes next. XLY, let's look at that one. And that one had been a fairly strong one. You know, it's in support, bounces off of it. Again, Thursday, top of the Thursday bar is the key. And they all look to me like they're gonna die as soon as they get up there, if they get up there. So a little bit more bounces possible here in the sectors. Looks a little bit more positive to me in general than the indexes, yet this is really a weak bounce so far. Now, it's the first attempt to bounce. You've had a very strong market. You got a nice push down, 2.5%, 3% across the board, a little bit more in some cases. And now you're trying to turn and bounce. That can actually turn into something. Tomorrow, you have the Fed minutes. Those minutes are going to reveal more about the tapering. As you know, tapering is a big concept, big talk now. If those minutes suggest that the tapering is coming at the September meeting, this market's going to sell right back down. The interest rates are going to go up again, and it's going to struggle. If they don't suggest that, or if they clearly suggest that's not going to happen, then you could get the spike up here that you're looking for, right? In order to go up and test these Thursday highs and potentially start to try to fill that gap. That's what's most important right now, because in most of these cases, that Thursday gap down broke the range, and the highs of that Thursday gap down is the lows of those swing points, in case multiple swing points like here that were broken. And if you can't get back over that, you can't get back over it fairly quickly, you have to feel fairly clear, fairly comfortable that more than likely this thing's going to work its way back farther. And so tomorrow's going to be an interesting day because of the Fed minutes and because of the bounce today. You can get continuation tomorrow off of it, or you could just simply die on the vine and fold tent and go the other way. And so tomorrow's going to be the key day, and it's going to come out. I think those minutes are out about noon my time, 2 o'clock Eastern time. And they will be the tell of the tape. Let's go look at the Ox markets. I didn't get a chance to see these. I was trading today, so I have an idea about what happened, but let's start with the bonds. So the bonds got a push back up the other way today. It looks like they broke another swing point that's off the chart here on the way back on the daily. So there is a quote-unquote retest regen taking place right now on that swing point low, which we'd have to go back. If you're a user of TA today, let me just show you how to do this. If you're a user of the products, you can actually go find these swing points and see what they are. So if we go to the TLT and we bring it up, and if we scroll down, let me get this back up here so you can see it. If you scroll down, you can go back and see what was broken. So this was at a swing point from 211.0811. That high was 103.20. So now if we come back to the TLT, 103.20 was the number. And you can see we traded back up to 103.36. So we're doing an immediate retest regen, and we're over it, and it looks like it's going to fail. In other words, it's not going to regenerate lower off that swing point that was just broken. And so that's useful information, right? That says that this thing could actually bounce and come back up to the next one. And that would be the target, as a matter of fact. That's 105, I believe, 105, yeah, right on the dot, 105. And that would be the number. So unless this thing fails tomorrow, regenerates lower, and again, we got TLT notes tomorrow, TLT. We've got the Fed minutes tomorrow, which could sell this thing right back down or spike it. The way this has set up looks to me like what you're going to actually get is a spike, which would mean the equities might try to rally, bonds would rally, we'd probably see the commodities sell off some, and we'd probably see the dollar. The dollar has already been beat up, so I don't know if the dollar is going to go down much more on that news. Let's go to the dollar. Okay, so here's the dollar. So the dollar comes down to test the lows. Has no volume down there, 1.6 at 21.82. It got to 21.82. It's got 8.7. Doesn't have the volume. Half the volume as it comes down. Let's see, that prior low was 21.86. We closed at 21.87. So you didn't break the swing point low either. You got underneath it, you had less volume. So this is a failure in 2 counts to get lower. You failed to break the swing point low, and you failed the test of this other low. Looks like a bounce coming in the dollar. Let's see if the FXE looks like that. So we go over there. Yeah, so this guy goes up, and it actually gets over the high and stays over it though, 132.89. So this is interesting. So look at that, closed at 132.89. So it actually did not close over it. That's about as close as you can get. Doesn't have the volume. That, like the UUP, looks like a flip around, back the other way. Amazing. Okay, how about the FXY? So the yen, tried to trade up but couldn't, got into that bar and failed. 2.2694, yeah, that looks like a failure too. It looks like it wants to come back, which would help the dollar as well. So dollar looks like it wants to go higher. So dollar wants to go higher. Bonds have a hint that they want to go higher. Equities can certainly go higher, but indexes are pretty mixed and wanting to try to go lower. Sectors are a little bit better positioned. So I don't know. It looks like we could get more bounce out of this guy the way these things are setting up. How about you? How about the USO? So the USO comes back. Okay, now the USO is an interesting story because the last time it did this, remember it came down here to test this July 3rd bar, 36.18. It had 12.1 million when it did it. It hit it with 10.8. That's a pretty good clip. You go up, you test the highs, 5.3 against 8.7. You don't have the juice, right? 2 swing point highs, you fell at resistance, and then what do? They start juicing it back the other way. This one's going to try to come all the way back and test this side now. So if you're playing all, you got a nice range developing here, right? From this point to that point. And it's coming right back at the other one now. How about nat gas? I haven't looked at this in a while. You got a pretty good bounce. It's up into resistance, got no volume. And on the weekly, that one had tested the lows and had failed to break lower on the weekly. So you got a nice bounce out of it. This looks to fail and come back. Now, the fact that this one has already tested the lows on the weekly, let me pull the weekly up here. The fact that it's already tested the lows on the weekly down here and held, at least held the last couple, it looks like. Or did it hold this one? 16, 18? No, it didn't. So it broke 2, but it held the 3rd. That's a pretty good indication it's going to try to come back and actually bounce, get an ABC going on the upside. Actually just had one and finished it, so we'll try to do another one. Let's look at gold and silver. Gold. Okay, so gold wouldn't back off. Remember, gold and silver had a nice spike up. They got into the bars that they were trying to get into, and the big bar just fell off the left-hand side of his chart. And that low was 130.51 on the weekly. So 130.51, you trade it up into 131, you're holding there. And you didn't test it again yet. 133.13. 130, yeah. This looks to me like it's going to test that area, maybe test this resistance zone tomorrow. How about silver? Silver is not as promising. Silver actually tested 22.50. Well, silver didn't test either. Yeah, these both can test that high again tomorrow. And lastly, let's look at junk bonds and some commodities. I see a question over here on commodities, so let me look at this. 39.15, and that one doesn't tell us anything. Let's see what the general commodities look like, and then let's quickly take a look at copper. So general commodities coming back. Oil's a big piece of this. They're going to build out a big bottom down here somewhere, and they're trying to do it now. Let's see what copper did. Copper came down a little bit more volume yesterday. Volume expanded again today. I don't know if that's a bad tick or not. That's another one that I have to look at. 42.13, 42. Well, if it's a real tick, it's attacking the highs with volume. And if that's true, then that means it's going to try to get back into that range on the weekly that it's been struggling with, right? Remember, it broke swing point lows, multiples, dove, right? Got a bounce, dove again. Now it's coming back up to test again. So the test here is, it tested into it today if that bar is real today. The real test would be up around 42.40, and then if it can get over that back into swing point lows, 42.40 to 41.70 is kind of the key area. And it looks like it tested into 42 today. Okay, so there's a question on CLF. Let's look at that. So what do I think the commodity is going to do? On China, will the commodities continue to rally on China is the question, and how about CLF in particular? Well, I think the issue. Well, let's think about it a different way. What's driving? The real question would be, what is driving the commodities right now? Why are they pushing up? Why have they pushed up? Part of it is they just got killed, and so it's at some point things bounce. So part of it's that. Part of it is emerging markets, in particular China, had turned and was really starting to stimulate again, and yes, that was a big piece of it. I don't know that that's going to change in terms of China. So from that perspective, yeah, China will still be a positive to these. Let's see what CLF looks like. I don't know how, what makes me hesitate is if the general markets continue to struggle, most stocks will struggle. And that's true of the basic resource stocks as well as any other ones. And so if you remember on the weekly, the XLB failed. And that led to a pullback, and now you're getting a little bounce. So right now you're sitting with a failure on the weekly on the intermediate term, and we'll pull that back up here in a second. Let's look at CLF real quick. So you had big volume spurt, just coming straight back though. And if you look at the weekly on this guy, you can see that this is like, the commodity charts, and that it's trying to build a base too. Now, what's important on the weekly is you're not getting significant volume expansion here on the way back up. So the high, it did break it with more volume, turned it to sideways on the weekly. That's a good sign. Volume's not great, but it's okay. And here it looks really good, right, compared to what's been out there. I think, when you're seeing something turn, I've talked about many times, you just want to be careful with it, and you want to try to let it retrace farther than you think it's going to. And in this case, it really is where you see these support zones. So this big bar from July 26th, around 20, that's a good spot. And you said you'd like to get around the mid-20s. I think you might even get it lower than that. As a matter of fact, I would feel fairly comfortable you're going to get it lower than that, somewhere around the low 20s. But yeah, that's where I would be looking. And then, you just have to put a stop up underneath it. That bar is wide though. It's a $1.70 on that bar, so it's going to be hard to put your stop in there. I would probably use a different approach and use this bar as well with that support zone. And that bar's got 1950, so I'd have my stop somewhere in the low 19s. Okay, so tomorrow's a big day, of course. Fed minutes, I would think this market's going to probably anticipate first thing in the morning, then probably go dead for the rest of the day until the Fed minutes come out. And just like on a Fed meeting, you're going to get a lot of gyration off those minutes more than likely. And then that, whichever way that breaks, assuming that there's something definitive on one side or the other, that's pretty much going to define the rest of this week. And so, overall, I'm not overly optimistic here in terms of what I see happening. And I think we're just at one of those inflection points where the market's going to have to work off some stuff. And, it's been up a lot this year. It's been hanging up there, hasn't given anything back substantial. It's about time. And I suspect that is probably what's starting to line up here. That's kind of my view. All right, folks, I appreciate you being there. You tell a friend, tell two. As I've told you before, if you just pop over here, we've got, if this is your first time looking at these, on the TATV, there's all channels. If you pop into the all channels, you can actually go over to YouTube, pick these shows up there live, watch them on your mobile devices, your iPads, and so forth if you choose. It's a convenience that we've added to make it easier for you to watch us anytime, anywhere. I'm LA Little, and this is and was your daily TA Wrap. Have yourself a great night, and I'll see you tomorrow. Good night, folks.